All right, let's get right into it. If you're a non-resident Indian and you've been thinking about maybe moving back home, well, India's Budget 2026 has some really big news for you. We're talking about some major new incentives that have been rolled out, and they're designed specifically with you in mind.
And this is so much more than just a few tweaks to the tax code. You should really think of this as a strategic welcome home initiative. The government is pretty much rolling out the red carpet for skilled professionals and investors, really inviting India's global talent to bring all that expertise and that capital back into the country.
So let's break down the first major piece of this package, because it's an absolute game changer on a personal level. We're talking about a brand new tax holiday.
And if there's one number you need to remember from all of this, it's this one right here, 5.
That's right, for 5 full years, your global income, and that means any income that isn't sourced from India, could be completely exempt from Indian taxes. I mean, think about that. It's like a protective shield for your international investments and income for half a decade. That's a huge incentive.
Of course, there's always a little fine print, right? So what's the catch? Well, to be eligible, first, you must have been a non-resident for the 5 years right before you come back. And second, you'll need to operate under a specific government scheme that's going to be announced. So it's really crucial to make sure you tick both of those boxes. Okay, but that's not all. This whole thing isn't just about saving on taxes. It's also a major power-up for any returning NRIs who want to invest in the Indian market. We're talking about a whole new level of freedom here. Now, to really get what this power-up means, you need to know about something called the PIS, or the Portfolio Investment Scheme. The easiest way to think about it is that it's the official regulated gateway for NRIs to buy and sell shares on India's stock markets. And it's right here where things get really interesting.
And wow, this really shows you the new reality for investors. Just look at these numbers. The individual holding limit, how much you can own in a single company, has literally doubled, going from 5% all the way up to 10%. But even crazier is the aggregate limit for all NRIs in one company. That's jumped from 10% to 24%. That's more than double. These aren't just small adjustments. This is a massive shift.
So what's the bottom line for you as an investor? Well, simply put, you've got so much more room to play. It gives you the flexibility to take a larger, more meaningful stake in the Indian companies you really believe in, letting you be a much bigger part of India's whole growth story. All right, so we've seen the benefits for you, the individual, which are pretty huge. But let's zoom out for a second and look at the bigger picture. Why is all this happening right now? Well, it turns out these policies are a really important part of a much bigger strategy to fuel the entire national economy.
And the government has been really clear about its main goal here. It's explicitly, quote, a measure to attract high-skilled global talent. The whole idea is to bring the best and the brightest, people who have gained all this incredible experience abroad, back into the Indian ecosystem.
The logic here is actually pretty simple. It's like a cause and effect chain reaction. Step 1, you offer much greater flexibility for investors, like those new PIS limits we just talked about. And step 2, the intended result is that this drives higher foreign retail participation straight into Indian stocks. That boosts the markets and pumps fresh capital into the economy.
So when you put it all together, what you have is a really powerful incentive for individuals combined with a very strategic move for the nation. It's designed to be a win-win. And that really just leaves us with one big final question. Could this be the moment that finally kicks off India's long-awaited brain gain?